Hey guys, how's it going? This is Eric Brickus. To help out my YouTube channel, please subscribe. It's Eric Brickus. And let's get started with the content. This is one of the articles that I wrote. Should I get a solar loan, lease, or cash? It's really important that you make the right decision because there are a lot of factors that come into play. I go on to the blog, I have more than a decade in real estate experience, over 6 years, helping homeowners go solar. So there are many situations, whether you're gonna sell the home, refinance, or if you plan on keeping the property long-term for personal use. This article could potentially save you tens or thousands of dollars. So the first thing that we're going to go over before we start this video is if you are a homeowner and you're considering taking a look into solar because you're tired of utility companies, increasing year to year. I mean, the average 5 years in most utility companies nationwide, we have seen a 10 to 20%, so 15% average in the last 5 years. Duke Energy, in most cases, at least doubled from 4 to 5 years, depending on the county, depending on the state. We have so many articles. Straight from the Duke Energy website. In 2022, we saw a 33% rate hike. So it's always saying here, we're always considering how to soften the impact on customer bills. So we're pleased to propose this creative way to reduce the increase by 33%, as if that was a good thing. So FPNL, Florida Power and Light, they're also raising their rates. And why is that? It's because most of these utility companies, they are producing energy or buying from middlemen, which they're producing over 85% with fossil fuel energy, natural gas, and those prices have skyrocketed. We're going to get into that in other videos. But if you look at the price of the oil barrel, it has gone over 5x depending on the year 2023, 2024. We saw a huge rate increase in 2023 because of the increase of the petroleum, of a barrel of oil. We had the Nord Stream pipeline, which is kind of weird. It kind of blew up, and that was what was connecting. Definitely don't know if that was an accident. That was the largest natural gas pipe that Russia was feeding into Germany, a European country. So that blew up, and then we saw the price of Germany bills go up over 500% in that same year. So the main reason why it's so interesting going solar is because yes, you are renting energy as opposed to owning energy. And over 85 to 95%, depending on the utility company, they're using fossil fuel energy, and hopefully they get into renewable energy. But what's the problem with that? They're still a monopoly or regulated. You can't choose the utility company. You can't say, hey, I want to go to the different company now. No, you're stuck with them for life in that address. That's just how it goes. So there's nothing really you can do there. And hopefully they do start increasing that percentage into renewable energy with solar farms and so on. The problem is you're still going to be renting energy, and there's something called inflation. If you're a homeowner, you can click on this link right here in the top right, free solar quote with me. It's going to take you directly to this page here, power.com/Eric Brickus. Power PBC is actually the best company that I have ever worked with. My 6 years of experience, I worked from anywhere from mom and pop small businesses to large corporations, and Power PBC is an incredible company. They're a certified B corporation. Most people really don't care about things like this. They just, people go solar. Some people care about actually saving the planet and switching from dirty fossil fuel energy to clean energy. Our company, Power PBC, was able to offset a total of 2.2 million metric tons of CO2 over their lifetime, and so many great things like that. But most people are interested in essentially just what's in it for them, right? What are the savings, right? Our company, we've been recognized over 5 years in Inc. 5000. We were considered by Inc. 5000, that's straight in their website, in 2022, number 43 fastest growing company in all the US. 2020 as well, number 938. 2161, so we're just increasing 43. And then obviously the paradigm is the larger the company gets, the harder it is to have that rate of growth, right? So it's a great company. We got great reviews, great customer service. We have the largest sales volume. Over 22,000 installs just in 2022 alone. We got Power Care 30-year warranties. We get the best equipment. We don't sell outdated equipment, and we have the best pricing because our volume is so big, and we have this platform that is able to allow us to scale. Our sales volume is so much higher, so we get much better pricing in wholesale in terms of equipment such as solar panels and inverters and so on. And it is an incredible company, hands down. They're ethical, their customer service is on par, and it's incredible. So I have a solar proposal here that this is what we're going to use. Not going to share his address or information like that, but let's talk about this now. And I'm going to leave all the links of what we're talking about here in the description of this video. That's going to be on YouTube and also in the vlog. So cash, I'm just going to start reading here. So the answer depends. If you have cash in hand, paying upfront in full offers benefits such as 0% interest, no dealer fees, and typically ROI within 5 to 7 years. If you're not actually putting money down for your solar system, then, you know, in the traditional sense, there isn't an ROI because there's no initial financial risk. You're not actually putting any money down, and you're already renting the energy that's always increasing and never ending, right? Think about it this way. FPL, Duke, OUC, TCO, whatever it is, you know, regardless of the utility company, and there's a lot of them out there. The fact of the matter is you have an always increasing and never ending bill, as opposed to solar. It's a fixed and there is an end date. And what's really interesting about the cash option is if you just have that cash laying around, if you apply that money in, let's say, the stock market or any other investment, you know, you have an annual return average anywhere from 5 to 8%. If you're getting a return on your investment 5 to 7 years, that means you have anywhere from a 15 to 20% rate of return. But the thing is, the cost of opportunity is, you know, most people, they don't have, I mean, over 95% the same way. Most people, when they get a mortgage on their home, they don't have the money to pay for that house cash, right? So they finance. So it's all about the cost of opportunity. Why don't people wait until they have all the money to purchase the home? Because by the time that they get the money in those cases, especially we're talking about, you know, the largest investment most people make in their lifetimes is purchasing their home, is inflation, you know, and the value of real estate has been increasing. So they're never eventually going to catch up. So it's a very smart thing to just lock in the value so that, you know, you're getting a hedge against the inflation and the continuous increase of the value of real estate property. So that's why people go. So there's a cost of opportunity. You know, you're already renting the energy. So it's like, oh, it's too expensive. Like, well, if you can get pre-approved on a loan or a lease, right? Getting a pre-approval on a loan that doesn't affect your credit, it's a soft pull. And leases at all, that's another benefit to leases, is there isn't an actual DTI impact because it doesn't affect your credit score because it's a lease, not a loan. So it's basically this. If you have the money laying around and you just want the thing fully paid off, and you're going to have an ROI anywhere from 5 to 7 years, in some cases more, and that's going to obviously depend on the rate of increase on the utility bill. That's how you can kind of offset that by how much you're already paying. It's a great thing because you'll be able to claim the 30% federal solar tax credit. You don't have to hand it over to whoever is offering you the loan. So that's, what is the 30% federal solar tax credit? We're going to get into that, but basically it's a deduction on your tax liabilities. It's not a rebate, so it's not like, oh, I don't have any payable, you know, I don't owe any taxes. I'm gonna, you know, government's gonna write me a check. That's absolutely not true, and that's a lie. And someone's telling you that, they're disinforming you, and it's always very highly advisable to speak to a, you know, CPA accountant to verify all that information. And also directly from the IRS, I left the link here. You can click on the link right over here. It's form 5695. So there's instructions and the actual form to be able to get the federal solar tax credit. So cash, so it's over here and the link's over here. So cash is interesting if you actually have in the next 5 years from the date that you get the solar system installed, if you actually have enough tax liabilities to deduct from the solar system, which is based on 30% of the solar system. So let's assume, right, going into this system right here, right? And this is a massive system because he has a very large bill. His average bill is around $569 a month. We're taking this into a 12-month average, which means based on the rate of increase, which is 6%, which is so super conservative because his utility company is Duke Energy, and they have been increasing an average of 20% a year, like some of the articles I've shown you just in 2022. This is straight from the Duke Energy website. We'll leave the link down below. You know, it was supposed to be higher, but they're like, hey, we got good news. How about this? We're going to only increase it by 33%. So they had a 33% rate increase in 2022, which is insane, right? And then another depending on the county, 20 to 30%, and the state also, because Duke Energy is massive. So it just kept increasing. So there's that, right? Currently, at the time that I'm recording this video, it is October 3rd. So I got his most recent utility bill, and he has an annual energy consumption of around 39,394 kilowatt hours per year. Yes, he has a very nice jacuzzi, very large home, a lot of usage. Obviously it's based on square feet, and there are ways that you can lower the consumption, especially if it's not a new home build. Straight from energy.gov website, we're going to talk about this in another video, is, if you have an old AC that's more than 10 years old, replacing it with a brand new air conditioning system, HVAC, can reduce the consumption or increase the efficiency anywhere from 15 to 30% alone. Just the AC. That is the biggest energy culprit consumer in your household. Then it's like the water heater, if you have a pool pump, and then the appliances and so on. So HVAC, especially if you're in some areas that you use it a lot. I mean, Florida, you definitely got to have the AC going on, especially in the summer months, and then winter months you're gonna turn on the heater. But the reason why they're the highest consumption, specifically in Florida, is in the summer months, is because it is so hot and humid that you can you're gonna go crazy if you don't turn on that air conditioner there. So there you go. But his annual consumption is 39,394 kilowatt hours. So the goal of going solar is to offset that with a solar system that's going to be able to produce that amount, preferably that amount or more, right? The analogy is great. 101% offset is going to produce 39,644 kilowatt hours with this 31.5 kilowatt system. And we always have to look at a 12-month perspective of how much you're going to save. Why? Because the energy production and consumption, it varies from the summer to winter months. Obviously, you're going to produce more energy because there's more solar irradiance in the summer months, and you're also going to consume more energy. But especially depending on the offset, you're going to be able to have a backlog or excess kilowatt hour credits relative to the winter months where there's not as much solar irradiation, right? The way the sun goes is the reason why there's more solar irradiance and things tend to be hotter and the temperature and so on in the summer months is because there's something called the azimuth, which is the direction, the tilt that the sun travels. So it always goes east to west, right? And then in the winter months, the sun starts going down south, right? So it starts going down south. And then once it starts approaching the summer, it starts going more north, which is more direct to the geographical area that you are in, right? What are the most ideal locations for a solar system? It's always going to be areas such as south facing, and then because that's where you're going to have the highest solar irradiance based on the azimuth of the sun. And then north facing roofs, are going to tend to not produce as much. So there are better roofs than others. Let's analyze this roof here. I would say it's a good roof because it's going to offset the energy. It's not the absolute best. What's the absolute best roof in the world is if you actually had a perfectly south facing roof, right? You can tell this isn't exactly north. It's more like northwest and northeast, right? Like this right here would be northwest facing. This is northeast. If it was directly north, so instead of having like this tilt, if it was like this, right, from the position is exactly north, that would be even worse because that is the absolute worst position in the northern hemisphere, which is the U.S., to have solar panels because the irradiance is much lower. In this case, it's not the absolute worst roof because it's tilted, so it's kind of like half and half, right? It's north, this section right here, but it's tilting towards the west, right? So it's producing more than just north. And this section right here is not just north as well, it's northeast, right? So the irradiance is going to be higher because the way it's tilting, it's also going relative to the east. Most homes, and it's just not possible in the HOA or where it's being built because, relative to where your land lot is, where your home is actually going to be relative to the street and the door, and all that stuff. So there's that. But, with the increase, the utility rate hikes, I mean, it's going to get to a point of it's just going to be unsustainable. And then you're going to have to go solar because let's just look at this projection here at a 6%, right? I showed you that in certain years, Duke Energy raised it, by 33%. In some years it was, average of 20%. So this is pretty conservative, 6% a year. So his average based on a 12-month perspective, the way that we calculate this is we look at the annual consumption, which in his case was 39,394 kilowatt hours, and good job for Duke Energy for allowing us to see that, easily, because utility companies like FPNL, it's a little bit more complicated to have the exact kilowatt hour usage. You have to go into the FPL account, view budget, and billing history, right? Because the utility bill doesn't just give us the 12-month annual energy consumption. I didn't have to say 12 months for that, but you know what I mean. You have to go into there and look at every single month, because the graph isn't very accurate, I would say. I always prefer with FPNL to always look into that, but that's not the focus here. So the focus here is to show you the rate of increase, right? In year 2, based on a 6% annual increase, his average is going to go up to $603, right? And mind you, the most recent bill that he showed me was for September, the month of September, and that was like around $600 to $700, something around there. So obviously when we're looking at the average, summer months is going to be higher. Some months are going to have $700, $800 months. And some months, in the winter where the energy consumption isn't as high, he's going to have around $400 bills and so on. So this is the average, right? Based on a 6% increase in year 2 is going to be at least $603. And that's only if he has a rate increase of 60%. If they do another 20%, it's going to be much higher than that, right? It's going to be this times 20%, which would be another $569. 10% is $56. 20% would be like around $112, right? If we get the calculator here, let's calculate this, right? Let's go to what would be 20%. Right, $113. So if the following year, if it's another 20% or whatever, it's going to be $682. So we're being conservative here, right? By the way, the Vision and Power, this is a proprietary tool. It's not a third-party solar designer engineering tool. It's Power. It's by far the absolute best solar designer that I have ever worked with, right? There's many other ones, but this is by far the best. I mean, just look at this. It's so nice. It's so informative. It's absolutely great. So we're going to get into the solar options, whether it's a loan or a lease, so you can kind of understand the benefits of each thing and regarding if you have the tax credit or things like that. But going back here, you kind of see how much you're going to be paying, right? 5 years from now, based on a 6% increase, it's going to be $700 average. 7 years, $800. 10 years from now, right, it's going to be $900, $1,100, $1,000. 25 years from now, based on only a 6% rate increase, and yes, it's not just a boogeyman, inflation is real. If anybody realized how much the groceries have increased from a couple of years, from comparing back to 2019 to 2024, you see that inflation is real, right? Now they're doing some quantitative easing now by lowering the Federal Reserve, federal interest rates, because they're saying that inflation has improved. But I don't know, man. I haven't seen that much of a reduction in inflation when I go to Costco or the grocery store. So in 25 years, based on a 6% increase, is $2,300 bill average. So you ask me, you think this is sustainable? You think that people's salaries and income are going to increase in proportion to the rate of inflation and the utility increases? The answer is absolutely not. The electrical bills, they are projected to become just as expensive, or if not eventually more than an actual car payment. It already is one of the most expensive recurring monthly bills that families have in the world, right? And the tendency is it's going to keep increasing because over 85% of most utility companies still use fossil fuel energy. So that's just an example here, right? Let's go back to reality in year 1. So that's just for you to understand. Let's go straight to the point here. So cash is good, and then you can read this article. I'm going to leave the link down below. Cash is essentially good if you have cash laying around, but don't wait. Just like most people didn't wait for, getting the cash amount to pay for their house, because it's not worth it. It's called the cost of opportunity. It's not worth waiting because you're already renting energy. You're already paying for a never-ending and always increasing bill. It's going to keep increasing. So it's all about the cost of opportunity. But it's good if you have cash laying around. If you want to have a return on your investment anywhere from 5 to 7 years average. And also, it's very important that you have sufficient tax liabilities to be able to claim the 30% federal solar tax credit. Also another great benefit for tax, because how it works with, at least with solar loans, is if you have a solar loan, you're going to have to give that to the lender once you're able to finally claim the full amount, and they re-amortize it, because people also, they're not able to claim the full 30% federal solar tax credit when they're deducting on their taxes in year one. That's why they give you up to 5 years. So if you're not able to claim up to 5 years the full federal solar tax credit deductions on your tax liabilities, then maybe it's not worth getting cash for a solar loan. It's better for a lease. We're going to get to that, right? So yeah, only 5% of buyers, same thing with real estate, actually pay for their solar cash. But it's great if you're able to claim the tax credit, if you have that money laying around and you just, want to pay the thing off and not have to worry about it, and then it's essentially free electricity because you don't even have a solar loan anymore, or a lease or anything like that. And you can just enjoy free electricity minus the monthly. They have a fixed monthly amount. In this case, Duke is $35, FPL is $25, OUC currently anywhere from $12 to $16. So that there is like a solar fixed charge, but you're not going to pay that. Whatever your average is, $300, right? Because you have a solar system that's producing the same amount or more of energy. If you have a roof that is viable to do that, or maybe it's 80%. We're going to get into another video about, is it still worth going solar with an 80% solar offset because you don't have enough roof space because your house consumes more and there's not enough roof space to be able to have a full offset. In that case, is like an analogy of if you could fill up eternally for the rest of your life 80% of the gasoline consumption, where you can for the rest of your life get it for $1 a gallon. It's still worth saving 80% of your gasoline consumption at $1 a gallon and then pay the normal rate for the remaining 20%. That's kind of like the gas analogy there. So hope that makes sense. You can read this later, and let's go to the next thing now. Loan versus lease, which is best for you? Deciding whether to get a loan or lease depends on your personal financial situation, since this is not a one-size-fits-all decision. So if you're a W-2 or a 1099 business owner, this is especially relevant. A lot of business owners, by the way, they often have more write-offs, so they don't owe any taxes for several years. So that's going to depend on your tax situation, and always consult your CPA accountant about that situation specifically if you are in doubt. But be rest assured, it's only if you actually have tax deductions, right? Tax liabilities to deduct. It's not a rebate. So some crazy solar sales, shoe selling, Kool-Aid drinking sales reps are gonna go, yeah, it's guaranteed. The government's gonna write you a check. It's great, and it's not true. It's only on taxes you actually owe in the next 5 years. So keep that very clear. Here's Form 5695, right? So best option. Now let's go to, depending on the situation, what's gonna be best for you, right? Best option for refinancing or selling your home in the next 5 years, and you cannot claim the 30% federal solar tax credit. So if you fall into that category where you do not have enough tax liabilities due to your current tax situation, a solar lease could be your best option. Leasing companies claim the tax credit and allows them to, one second, stay in the call, right? And by the way, this is how we're going to do the solar consultation. Super fun. It's going to be in Google Meets. I can send you the link. We can do a quick 15, 30 minute, whatever it takes. I'm super straight to the point, concise, so I can give you a consultation to see if solar is the right fit for you. And once again, click on this link. I'm going to leave in the description down below, power.com/EricBrickus. Also, we have an ambassador program. Power will pay, automatically receive this commission. You'll get $1,000 for anyone that you recommend going solar. So here's the link as well for that. If you have anybody who wants to save money on the electric bill and endorse, right, this mission of making the world go into, switch from dirty fossil energy to clean solar energy, then you can sign up as an ambassador, and then you can refer anyone that you think would be interesting in going solar, right? And also, there's a great opportunity if you're actually wanting to make this into a career. So if you actually want to be more hands-on in the process of enabling people to go solar, then you can actually join to become a consultant yourself and actually be able to offer the project duties, really cool designs, and so on. So this is also the link. It's power.com, EricBrickus/join. Leaving the links down below. So let's go now to breaking this down. What's going to be best for you? So if you are not able to claim the solar tax credit, solar leases could be an amazing option for you. Why? Because the leasing companies, they will claim the tax credit, which allows them to offer you a lower monthly payment when you compare them to loans in many, many cases. So since they claim the tax credit, they're able to offer you solar payments with zero dealer fees and little to no interest rate. Options anywhere from 2.9% escalator to a 0% escalator. And that's also going to depend in your situation. If you're going to sell the property or not. I just prefer, in most cases, if you're going to keep the property long term and you just want the long term highest savings, go with the 0% escalator. Now, if you just want the highest upfront savings now because it's a lease, 2.9 could be an interesting option, and that's obviously going to depend on you. If you ask me what I would recommend, that's going to depend on your situation, and I have to ask you a couple of questions to decide what's going to be best for you. So if you are going to refinance or sell your home in the next 5 years, a lot of people are in that situation, and you also can't claim the 30% federal solar tax credit, solar lease is great because you're locking in the rates and you will have a hedge against the utility rate increases that you're renting from them, the energy from them. So most cases, not all the time, most cases in year one, you will already see savings in year one, and that's without a battery. If you want a battery, which, that's a whole different subject, and then we're going to get that into another video. There's a lot of content about that I'm going to be sending in my blog. If your power goes out, you will not have energy, right? If the grid blows out, you get a blackout, brownout, whatever it is, a hurricane, whatever, you have no electricity. Obviously, the grid is down. You won't have any electricity. And with solar, what is the main benefit of getting solar without a battery is you're locking in the rates, but because the solar is grid tied to the energy, you're essentially producing that energy, that excess energy that your house doesn't use during the day, shoots back to the grid in the form of credits. If you have a one-to-one net metering utility company, then that's how it works. If you don't, if you're in California or if you're in Georgia or some places, regardless where it is, LCC, and you don't have dollar for dollar credit where you're getting 100% credit per kilowatt hour of how much they're renting you, then yes, a battery could be more beneficial because instead of throwing away excess energy that your solar panels are producing, then instead of throwing it to the grid where it's at avoided costs and you won't actually get dollar for dollar credits, then it's more interesting getting a battery in that case. That's why it's not a one size fits all. We'll get into that later in other videos, and you can definitely subscribe to my YouTube channel, Eric Brickus, in this video, and follow my blog and see other articles. We have a lot of great stuff in there. But also, so we're going to be going into this project so you can kind of compare the differences in pricing. But what are other benefits of Sunnova? In the event of, I'm going to leave this link as well. In the event of a natural disaster, right? The roof is leaking after natural disaster. I mean, we just had a hurricane. Helene, was it? Crazy. I mean, it was, oh my God, Panhandle. Hearts out to you guys. The Florida Panhandle, North Carolina, South Carolina, Georgia. I mean, it's a complete mess, and hearts out to those states that people that were impacted by the hurricane. You guys get everything figured out and are able to recover from this devastating natural disaster. But that's the benefit of Sunnova when relative to loans or cash is, the Sunnova Protect Limited Warranty covers the equipment and labor required for repairs to your system caused by damage, including damage caused by a natural disaster. You cannot say the same with a loan or a cash, right? So I guess that is a benefit, especially if you're in an area that's really high risk. Like, for example, if you're in Orlando, there are really low small chances that you're going to have damaged solar panels. It can happen, but the rate of it happening is lower than, for example, if you're in the Panhandle or Miami or a place that has a much higher impact of a hurricane damage because you're in the coastal areas and so on, right? Or in the trajectory. So Orlando typically doesn't have get to a category 4. It could happen, but it's more rare. Plus the Unirack, the Solar Rack, solar panels, most of them, at least the ones that we offer, they are category 5 hurricane resistant. In that case, obviously, if like a tree or a car or something crazy apocalypse happens and something flies into your roof and damages solar panels, and obviously that's a different story. But it is a benefit because Sunnova, since it's a lease, they're going to repair your system caused by damage, including natural disaster, straight from their website. It will not cover your roof though, because your roof will fall into the category of dwelling unit coverage. So that's with your homeowner's insurance company. And really interesting from Liberty Mutual. Some people ask me as well, okay, well, if I get a solar loan or cash, what's going to happen there? Well, it usually falls into the dwelling unit coverage because anything that is permanent structure to your dwelling unit, your home, the dwelling coverage legally should cover any damages from permanent structures. And solar panels, including the roof and the solar panels, are considered permanent structure to to your dwelling unit because they're fixated, right? You put the racks in there, they're fixed. They become permanent structures. So dwelling unit coverage is a part of standard homeowners insurance policy that helps them protect the physical structure of your home. This can include any permanent fixtures attached to your home, like a garage. Your coverage limit is usually based on the estimated cost to rebuild your home in event of a covered loss. Frequently asked questions. What's the difference between homeowners insurance and dwelling coverage? Standard homeowners condo forming parts: dwelling, personal property damage, liability, additional living expense. And this is in some states you might need tier 2 insurance. In Florida, if you have a tier 2 system, which is anything above 11.74 kilowatts DC of a solar system, right? So they're going to require that you increase your excess personal liability. You can either in your insurance company or through an umbrella policy up to $1 million. And some states don't require that, and it doesn't even make any sense because theoretically, I have a blog article about that, matter of fact. You can actually go and find it if you're interested in knowing about this tier 2. Why do Florida utility companies require additional insurance for tier 2 solar systems? So you can read about that. I'm not going to get into that into this video, but it is in ericbricks.com. You can take a look at that later. So, and it says here as well, my roof is considered part of my dwelling. Yes, because your roof is attached to and is part of your home. It's considered part of your dwelling, just like your solar panels. So that is an interesting caveat. Some solar homeowners insurance companies are like, oh, I'm not going to cover the solar panels because they're not covered. Only the roof is covered. And well, you're going to say, well, it's a permanent structure of your dwelling unit. So in most cases, legally, they're required to cover, with the exception that they have a clause specifically stating that they will not cover any solar panels. So you have to make sure that that clause isn't there. Negotiate with your homeowner's insurance, and depending on the state that you're at, is a complete mess. Florida, the amount of hurricanes, with the amount of liabilities, billings and losses from insurance companies, yeah, it kind of is a mess. Most people get the state minimum with citizens, and so you have to kind of learn how to navigate, and depending on the situation, yes, make sure that you are, if you're in a high risk hurricane area, make sure that you're covered and consider these factors. So that's interesting. I'll leave this link about what is dwelling coverage from Liberty Mutual. Now here's the situation here. It says here, what does my warranty cover? So Nova Protect limited warranty covers the equipment and labor required for repairs to your system caused by damage, including damage caused by natural disaster. The warranty does not cover damage to the roof. That's your insurance company. Please contact your homeowner insurance company for information on coverage for damage caused by winds and storms. If the company in charge of roof repairs requires that the system be temporarily removed for the roof repairs, please contact us to obtain a quote for the assembly and reinstallation of the system for your insurance company. So at least for the labor, for the equipment, the actual damage of the solar panels, you're covered. And then obviously, since it's permanent structure to your dwelling unit, legally, they have to cover the removal and reinstallation of solar panels because it's part of your dwelling unit coverage, and make sure that that varies to the homeowner insurance company. Make sure that your policy is accurate, that you ask questions about that. So there you go. Let's go back here now to the lease options. Other benefits of leases. So yeah, if you don't claim the tax credit, you're not able to get that. That's really interesting. Most homeowners, the goal is simple: saving money and switching from traditional utility companies to solar. Solar lease will provide the same or greater energy production for less than your current monthly utility bill. At the end of the lease term, usually 25 years, you can choose to buy out the system, have it removed, or replace it with a new one. This flexibility makes it attractive, particularly for those who may sell their homes. At the end of the lease term, you can choose to buy out the system. And also, this is another interesting thing. If you plan on refinancing your home, with the recent rate cut, and I also wrote an article about, how the Fed's rate cut could impact your mortgage. So a lot of people, they actually finance their home um, with higher interest rates, like let's say, for example, that you financed your home, beginning of 2023 or end of 2022, when, mortgage rates literally doubled, and, the rates start going down like they did. And September 18th, this guy right here is Jerome Powell. He did a 50 basis rate cut, which will slowly start changing, lowering the interest rates overall, the federal interest rates, and they're expected to. And that was a surprise. It was supposed to be a 25 basis point, but I guess with the inflation report going to their goal of 2-3%, which I don't personally, I don't know about that, but it's estimated that if things stay the same, there's going to be another 50 basis point reduction in the upcoming FOMC meeting. That's where they announce, the Federal Reserve announces if they're going to keep the rate steady, increase or lower, and the next one's going to be in November 6th, so that could be interesting. Here's another interesting thing. I just remembered about this port strike, East Coast. Man, if this goes on, and Biden already said, he doesn't really want to intervene as much. There was a mention of him. Can't really remember where it is, but what products could be affected by the port strike? If this goes on, I mean, the inflation can go crazy, and then that could be enough to make, Jerome Powell. Oh my God, CBS News. Let me find someone else. Chaos is building for shippers as U.S. port strike continues. Vote for Donald Trump. Okay, East Coast and Gulf Coast port strikes hits day 3 on Thursday. There are multiple signs of supply chain stress building. That's bad. Let me pause the pause on this site, man. Pause on this site. Okay, thousands of shipping containers. All right, so check this out. Chaos is building for shippers as U.S. port strike continues and costs rise. Yeah, if they keep up for each week of delay that we have, I mean, that can signify like a 6-week backlog of the logistics, and that's bad. That would be really bad. So East and Gulf Coast port strikes hits its third day on Thursday. The nationwide logistics system is beginning to show signs of stress, with thousands of containers dumped at the wrong ports and billions of dollars in trade at anchor on ships. Ocean carrier services for shipping clients are beginning to mount, and the need to use trucking and rail to move diverted cargo to ultimate destinations is adding to supply chain cost. So that could end up really bad. And so far, Biden is saying he's not going to intervene as much. I mean, hopefully he changes that outlook, because that would be really bad, and that can really just throw a lot of gasoline in the fire, and we'll see inflation go up really, really quickly. Something random here. Customers who may like the sweet Brazilian shrimp may have to buy Gulf shrimp. Okay. So yeah, that's going to affect a lot of businesses, and top companies with product or ankle vessels during the port strike. Walmart. Man, if you like Walmart, if you shop at Walmart and this goes on, say goodbye to low prices in Walmart for the time being. LG Electronics, Kubota, Kohl's, Toyota, Ford. I mean, this can also apply, obviously, to solar panels, because a lot of companies are going to say, hey, this is American-made panels, but that's kind of like a loophole that they say, because the majority of panels, they are from China or, the Asian parts. They can say it's American-made, but it's really not American-made. It can be assembled in America. The parts can be assembled, but they're not made in America. When it comes to the microinverters, Enphase, SolarEdge, they're U.S.-based. That's what converts the solar energy to home energy. It's what converts into solar panel, that process DC to AC, solar to home energy. But yeah, I mean, solar panels can also be impacted, and that's really not good. So there's that. Hopefully that comes to an end, because that would be very devastating. Going back to focus here. So yes, you do have the option of getting a lease. A lot of people ask me that question, and that's all in the term. You have the option to buy out the system, have it removed, or replace it with a new one. How do you buy out the system? Well, in the end of the lease term, there isn't a black market for used solar panels, 25-year-old solar panels by the time the lease ends. So you can probably, and I spoke with Jay. He works directly with Sonova. He's like, yeah, man, that's literally what he said. I mean, what are we going to do with these used solar panels, if you know what I mean? I mean, sure, there will be a value to it, but it's going to be very easier to negotiate. Or and this is also in the Sonova contracts, you can also extend it for an additional 10 years. So, and it's interesting flexibility, because we never know. Maybe like the world will come to, advanced AI and transcend, like that movie Transcendence, and like the technology goes so crazy 25 years from now. You just don't know, right? So it's interesting to have that flexibility as well. You know what? Hey, thank you for saving me. With this homeowner's case, $252,000. In the next 25 years, considering that we only see 6% a year, and historically that has not happened. It has been higher than that in the last 5 years. So, hey, you can just go ahead and remove these panels, because there's some other solar system or other technology, renewable energy, that I would like to use from now on. And it's fantastic. And, thanks for the free money. And thank you so much, Eric, for sharing me with all of this incredible information, and not just being a typical amateur shoe salesman who doesn't really know anything about, how the solar industry or product knowledge or anything like that. So there you go. Yes, sir. So there's that benefit as well. It gives you that flexibility. And also, the focus here is if you're going to plan on refinancing or selling your home in the next 5 years, and you can't claim that 30%. It's interesting because with the interest rate cuts, we could see lower interest rates. So that could be an opportunity to refinance your house. And unlike a solar loan, a lease will not affect your credit score or debt to income ratio, making it easier to refinance or sell your home. It only involves a UCC1 filing, which is a lien on the solar equipment itself, not on the house. So in the case of default, the worst case scenario would be the removal of the solar panels. And look, there really isn't a lot of financing instruments that actually puts a lien on the house, with the exception, I would say, it's called the PACE program, which we'll actually get into this soon. I'm going to talk about the PACE program right over here, and there's actually a website we're going to go over straight from energy.gov. PACE means Property Assessed Clean Energy, so we're going to get to that soon. So yes, they do there's a lot of benefits to it. But if you don't want to lean on the house, and don't put PACE, but in some cases, it really is one of the greatest options. Not a lot of people talk about it, not a lot of people offer, because they don't understand it. I study these things, guys. You have to understand, I'm passionate about helping homeowners. I actually care about you. I actually care about what I do, because my reputation is on the line. There's a lot of shady solar companies. There's a lot of shady sales reps. They don't care about you. They just want to they're going to say everything that you want to hear, and, for you to sign that contract on the dotted line, and then you get completely screwed over, and it's not good, because they just didn't specialize it. They don't care about you. I care about you. So PACE, I would say, is one of the only options that you actually put a lien in the house, because unsecured personal loans, so the traditional solar loans, they also put a UCC1 filing, just like the solar leases. Right? So if you want to consider refinancing, what's really interesting is it does not affect your debt to income ratio, which means different than the loan, which does affect your debt to income ratio. So that would, if you're going to refinance, the benefit of refinancing with leases is that it will not affect your credit score, because it does not affect your debt to income, because it's not a solar loan attached to your personal credit score. So it also not only makes it easier to refinance, but it also makes it easier to sell your home. Why? And I am a realtor to talk about this. What is the number one concern a lot of realtors and buyers have when they're looking at a not fully paid off home, solar loan on that house that they're thinking about buying, is that they're going to have to assume the loan. It's possible to assume the loan, but in many cases, that's just not good, because it can potentially lower the pre-approval amount that Yeah, I literally talk about this here. Solar Lease simplifies the home selling process as well, since potential buyers won't have to worry about assuming a loan or seeing their mortgage pre-approval reduced due to the added debt. For buyers, the lower utility costs compared to neighbors without solar can also be a selling point. So that's really, really interesting. Now, the two main options, the most popular option with leases are, there's a solar lease with a 2.9% escalator. This option increases your payments by 2.9% annually, but still offers a lower overall increase than the average 4% rise in utility costs. And if you're planning to sell within 5 years, this option provides the lowest upfront monthly payment. So if you know that you're going to sell the house, you don't want to put a loan on the house because either you don't claim the tax credit or you don't want that situation that I explained about having to assume the loan. And there are some ways that you don't have to transfer the loan to the new buyer and get them in a situation. You can literally just say, hey, on closing, I'm going to buy out the system for you. In this situation, some people are say, hey, you know what? I want a 2.9% escalator because relative to the average, depending on the state and the county, it's anywhere from 4-6% a year. But, that's being super, super conservative. It won't be lower than that. Absolutely. I mean, comparing to 4 to 6, let's say 5% from 2.9, it's still going to be saving the future homeowner money. It's still going to be saving you money. But that's if you plan on selling the house and then transfer that liability to the future homeowner. Now, that is an option. I recommend, in most cases, just get the 0% escalator. I know most people are offering 2.9% because it looks good on the utility bill. I would say just go with the 0%, not only just for you, but the homeowner. Not only there's no dealer fee or anything like that, it's a 0%, which means whatever that monthly payment is going to stay the same. Like this is for the home. I'm just going to say his first name. It's Davis, right? The owner of this beautiful, beautiful property right over here. We're going to be able to have a full 100% solar offset based on his annual, which was around 39,400. So the estimated production is 39,639. So he's going to be at a full offset relative to his bill. This system is going to produce the same amount that what he is renting, consuming, using from the grid of the utility company, which in his case, it's Duke, right? So Davis is currently paying, and now that we're going over the leases, he's currently paying an average of $569, right? Based on his summer, winter, his 12-month average. We're averaging it out around $569, right? We're going to be able to get a full offset. So he's going to actually pay with this 0% escalator option, right? Escalator 0%. He's going to pay $464.77, right? So total, because it's Duke, there is a $30 fixed fee. I'm not going to BS anybody. I'm going to tell you how it is. I'm not going to avoid. And that's why I always ask every single homeowner all the questions so I can see in the event they're talking to a solar company, making sure that they're actually explaining everything to them. So I'm always going to be confirming with the homeowner if they fully understand everything. In his case with Duke, it's $30 fixed. So the system is already calculating the $464 plus 30. His total monthly electricity cost is $494.77. Great. So if you get how much he's already paying, this is year one. We're not talking about the increases here. This is year one, right? If you get a calculator right now and you get his average, right? And this is also counting the fixed and all that, $569. And then we subtract that to, how much was it? He's going to be paying $464 plus the 30, $494.77. Right? $494.77. Well, there you go. In year one with the Sonova lease, he's already going to be saving $74 a month average for every single month. So in year one, he's going to be already saving about $890. But remember the compound effect, right? Because the savings will only keep increasing from here. Look at how much his utility company is going to keep increasing at a rate of increase of only 6% a year. But we've seen 33% in 2022, 33% rate increase straight from the Duke Energy website in 2022. Average has been 20%, 15 to 20%, depending on the county, depending on the state with Duke. So, I mean, it's not a matter of if you're going to go solar, it's a matter of when. The sooner you go solar, the higher the savings will be. I mean, every single penny that you give to the utility company, you're not going to see a penny back, and you're not going to lock in anything. That's the main benefit of even getting a solar lease, because everything that we're explaining here, depending on your situation, it might just be a much smarter option depending on the context. It's still going to be, especially if it's 0%, right? It's still going to be fixed. It's not going to ever increase again. Even assuming 6% a year, which I think, based on history, is going to increase. You're going to be saving every single year 6% on top of, in his situation, like I just explained, right? He's already going to be saving in the first year alone, right? And we're going to go over the cash, the loan option, just so you can understand. Okay, this is year 15, 569, 494, that's around 70 something bucks. In year one, it's gonna just keep compounding, affecting. Einstein said one of the eighth wonder of the world is compound interest. It's just crazy how it works, man. It just don't underestimate compound interest. Look at that, year 25 average, considering only 6% a year. I hope the planet doesn't blow up, and I hope all the best, and the U.S. is doing great and all that. But there you go. There you go. And by the way, when we can do these quick consultations together, you're going to also be able to receive this interactive proposal and play around with the numbers and see everything like that. It's really, really cool. And how do you also calculate the average utility rate? Well, if you want to do that calculation yourself, you go to your utility bill, whatever the total bill is, make sure there's no water, sewage, it's just the electricity, actual electricity cost. You divide that by the total kilowatt hours of that month, right? So let's assume that you paid for the month of September 2024, you paid like, I don't know, $320, right? And let's assume that you consumed in this household, I don't know, 2,150 kilowatt hours, right? So you divide it by that, and then you get, in this case, 14 cents. We did that math, and in his case, it's 17 cents per kilowatt hours. Get this, Duke Energy 5 years ago, back in 2018, 2019, you have these rates, it was like around 8 cents, 8 to 9 cents. It doubled from 2019, 2020 to 2024. It's around five years or so. It doubled. It was 8, 9 cents. Now it's 17 cents. In some counties, in some states, it's up to 22. So I have clients, Newport Richie, regardless of what it is, 22 cents per kilowatt hour. It was like 8 cents 5 years ago. 5 years. Come on. It's a no-brainer. Once you have the information presented and you really analyze this, you're going to be like, wow, this is a no-brainer. What am I doing? So there you go. I don't have to talk about this anymore. We already see the increases going on with the rate hikes. The decision between these options depend on if you prefer higher upfront savings, 2.9 escalator. So 2.9 escalator, basically, you're going to have, whatever this bill is, 464. If Mr. Davis goes on and says, you know what, I just want the highest savings now. I don't want to just save $74. I want to save, theoretically, we have to calculate it. I want to save $100, right? Well, there you go. You can save up front, but just know that you're going to have an escalator 2.9% a year. It's still better than, 6% a year, 4 to 6%, regardless of what it is. This is just in Florida. We're looking at the most conservative numbers, but you get the point. And that's, obviously, I'm just presenting the facts. I'm just educating. You're going to be the one to make that decision for you. And trust me, nobody, only really experienced veterans really know the complexity of everything I'm talking about. Most people are not. I say this in the beginning of the blog. Like, most solar company sales reps won't give you these details. I just want to tell you, 100% how everything really works. I'm just here to really tell you the facts so you can make the most informed decision of what's best for you. And it's not a one-size-fits-all, as you're noticing here. So going here, what is the best option if you're going to sell your home in the next 5 years and you can claim the 30% federal tax credit? Well, let's go over them. You can go with a higher APR, lower dealer fee loan. All right, so let me explain. And I'm going to show you here exactly how the dealer fees can affect the total system price. Okay, so if you're planning to sell your home within the next 5 years and are eligible for the 30% federal solar tax credit, opting for a higher APR loan with no dealer fee could save you a substantial amount. These loans allow you to use your home equity to pay off the loan without additional costs at the time of sale, potentially saving you $15,000 to $30,000, depending on the system size. Absolutely true. I will prove it to you right now. And why is this interesting? Because when you're going to sell your home, like I said, the best thing that you can possibly do is tell the homeowner, tell the future buyer, the buyer of your house, you're going to say, hey, on closing with the title company, during the closing process, we can take some equity out of my home so we can fully pay off the system. That way, you don't have to assume the loan and potentially lose or reduce your mortgage. So that is the absolute best way. But this is the problem if you're not going with an experienced solar professional, legitimate and ethical solar sales reps, or either ethical or competent or solar company is, check this out. If you decide, and guys, this is just, like I said, this is a massive solar system, okay? The average home is going to have a tier 1 system, which is like around 25 to 30 panels. It's like an average of 11.74 kilowatts DC, not 31.5. He consumes a lot of energy. His annual energy is 39,000. He has a jacuzzi, he has a mansion. It's a beautiful house. I've been there personally. It's great. So that's not for most people. Let's go straight to the point here. So this will be the cash price, right? So keep that in mind. Cash price would be $76,834. Getting this amazing solar system, 31.5 kilowatts, taking home $76,834. Obviously, he wouldn't be getting this rebate because it's cash. And in this, it's included because it's a tier 2 system in Florida. He's going to need tier 2 insurance, so he's going to have to increase his personal liability coverage to $1 million. So that's why we're including that there. Now, take a look at this. Let's assume that he is going to get an NFIN, right, 25-year with an 8.99 because he knows he's going to sell the property in the next 5 years or maybe less in 3 years or whatever, right? All right, so now it's here, the NFIN 25-year 8.99. Check out the price, right? $83,971. Monthly payment will be $522 with the tax credit applied. That's why it's really important to know. If you don't claim the tax credit, this is going to be your actual monthly payment for the remainder of, and most solar loans do this, is after month 19, like they'll start off until month 18 as if you already gave them the tax credit. But if you don't give the tax credit, it's going to increase to $735, right? And if you don't claim the full 30% in the first year, most people don't, you're going to be re-amortizing. So let's say you only claim half of the tax credit in year 1, just to keep it in simple terms. Then it's going to be in between $522, $735, whatever that amortization would come to. Let's say it goes to $580, for example, right? And then in the following year, once you get the remainder, then it eventually goes to $522, but only if you give them the full 30% federal solar tax credit, if that makes sense, right? So that's why I'm going over all these things. And if somebody's lying to you saying that doesn't matter if you have tax liabilities, you're going to get a check or a rebate, a government program is going to guarantee you, that's a lie. Just keeping it straight, keeping it real for you, my G. Right? So you get that 8.99, 83,000. Now check this out. What happens so that's going to be interesting if you're going to sell the property, but you don't have cash and, you want the increased equity because, loans are great, especially if you pay them off because, you're going to have that added value. You're going to compare to neighbors, surrounding neighbors. When you do a CMA as a realtor and you look at comparative properties, oh, this is like in the same community, in the same neighborhood, subdivision, same house as yours, similar, 3-bedroom, relative square feet with a pool, whatever, that one is worth $550,000. And so mine is also relative to those terms because that's what it was sold in the last 6 months to a year, whatever it is, right? If yours has a solar system and the same, let's just assume hypothetically, right? Their utility bill 3 years from now, like right now it's $350 and it already increased, let's say, to, I don't know, $450, right? But you got a situation where you are able to lock in that amount, right, with the solar loan. And then you tell them, you know what, you're not going to have that bill anymore if we're comparing apples to apples relative to the energy consumption because we're going to pay off that system. How much more value do you think that is, right, with a home that essentially doesn't have an electricity bill in the event that it's the same family with relative usage terms, right? And that same bill, now they're paying $100, $150 higher because they didn't go solar, they didn't lock in their rates, they didn't have that value. And with inflation and with rising utility costs, obviously there's a selling point for that. So this would be a very interesting situation if you plan on, if you're going to sell the property. Now check this out. If we get, all right, and this option is going to be better if you intend on keeping the property long term and you do not intend on prepaying it, and you can claim the tax credit. Let's assume now here that you, let me see, where's the, all right, 3.99, 25 year. Okay, let that update. Let's look at the difference in the price. Look at that. 115,000. Do you remember it was like 80 something thousand? It just went up like $35,000. Right? Right? The monthly is a little bit lower because the interest, it's much less interest than 8.99. But let's say that you can claim the tax credit and you intend on keeping the property long term. You're going to pay a little bit less, but it's going to be much higher. But overall, if you look at an amortization schedule calculator, which I left it in my blog post here, and if you put $115,000, right? It doesn't have to be exact number here, but let's just $115,000. Yeah, $115,000 at a 3.99 interest rate for a 25-year term. Now let's go back to the 8.99, right? 8.99. And I had a homeowner where he preferred this because he's like, well, I don't want to pay the full cash now, but I'm going to pay it in like a year or two. Get a higher APR. Don't get it with the crazy dealer fee for the 3.99 because you're not going to plan on keeping it for 25 years. You're going to prepay it, and you don't have to pay an additional 35% on dealer fees, right? Getting the 3.99, get the higher APR if you plan on up to 5 years paying it off. Ideally, the sooner the better, right? So, and you have to evaluate that. So let's look at 83,000. There you go. And the interest rate here is not 8.99. Check this out. This is going to be the best way for you to really break this down for you. Calculate it. All right. So with the lowest interest rate, but much higher dealer fee, right, to get the lowest interest rate, you're going to be paying total, right, with all the interest on the principal and the interest, the 181,000 with the principal and the interest, everything, right? But just leaving out the principal, just the interest of how much you're going to pay just on interest alone, you're only going to pay $66,912. That's why lower APR is better if you plan on either keeping the property long term for a rental property or just living in it or family member living in it. It's going to be much better if you claim the tax credit. Remember, and we're going to get to, I'm going to apply the tax credit amount here so you can see the difference. You're going to pay $66,000 as opposed to the second option. Okay, the initial known amount is lower, but look at that interest rate, 8.99. You're going to pay $127,000. You're literally paying twice as much interest because look at the difference, 8.99 to 2.99. So this amortization schedule calculator really shows how this applies. But the thing is, if you're not going to stay 25 years, you're going to sell the property, let's say in 2 years, in 3 years, in 5 years, or maybe less, whatever it is. Okay, I actually got a buyer next year, right? You're going to be able to pay it off, and you're going to be able to save literally around, close to $30-something thousand. You just saved yourself $30-something thousand because you don't have that high dealer fee associated to a lower interest rate. That's why it's really important to kind of understand the situation, right? Your particular situation of what you really want to do and have that flexibility. Let's apply the tax credit to see the difference here. So we go to incentives, select incentives, federal tax credit. I gotta take this out of here. There you go. Federal tax credit and save. So the net system cost with the federal tax credit would be, right, 30% of 83,000 is 25,000. Subtract that. The net system cost is $58,780. So let's see the difference. And this is for the $83,000 high interest rate loan, right? And now let's see the difference that the interest is going to show up with the 3.99%. Where is that 3 point? Okay, here it is. 3.99%. Let's see it with the tax credit now. So in this case, it would be $115,000 for the 3.99 with all that dealer fee. 30% of that is $34,000. So the net system cost would be $80,000. Let's recalculate it now, right? There you go. Right? Look at that difference. Look at that difference. If you claim the tax credit, right? So you apply the full tax credit towards the loan. You were able to get the entire tax deductions from the federal solar tax credit incentive, reached out to the lender. Hey, lender, here's my tax credit money, right? Look at that. It's still around almost double, right? Pretty much. So you're going to pay twice as much interest if you choose, just because it's a lower amount, but the higher interest rate. And for the 25-year term, you're still going to pay twice as much. That's why it's important for you to know what's going to be the best situation. So going back here, if you plan on keeping the home long-term, going back to the subject here, it's definitely, and you can claim the tax credit, it's definitely going to be the 3.99 because you're just going to pay $46,883 total interest as opposed to double that approximately, right? Make sense? Okay. And I left this calculator here so you can actually do this, and you can use it for other stuff too. It's really, really informative and, useful. And then you have the PACE loans, but PACE is only in Florida, California. If you're in a different state, sorry to tell you, I wish I could do something about that, but currently, maybe in the future it might change, but currently, as of the time of this recording, it's Florida and California only, right? Okay, and I was born in California, which is really cool, and live in Florida, and this is really cool. So PACE loans are a viable option for homeowners in Florida and California. These loans are attached to your property taxes, so they don't affect your personal credit. Really interesting. Check this out. If you have a situation where you don't want to affect your personal credit score, this loan will attach to your property taxes. They offer typically as well 0% dealer fee or really low initiation origination fees. So it's much lower than the other ones. However, be aware that selling refinancing requires paying off the PACE loan in full as it places a lien on your home. And obviously, whenever we're doing this, ask questions, reach out to the lender, reach out to the PACE. In this case, we're using home run financing. We used to have Renew Financial, but home run financing is just better, and that's the one we're using in Florida and so on, and it's great. But yeah, if you don't want to lean on your home, even though you're going to get these benefits of essentially really close to same as cash pricing, and not affecting your personal credit score for some reason because you don't want it to, then don't get it because it's going to put a lien on your house. Now, another interesting point, if you live in any of these two states, is that this is really cool, and I'm going to show you the website to prove here. It's always good to show some reference. It says IRS, Internal Revenue Service. It says PACE interest falls under mortgage deductibility guidelines. Basically, that's what I'm going to say here. As long as you, and that's again with a situation. If you have the tax credit, you have to make sure that you have the deductions. But the same way that you can deduct the interest portion of your loan, you can also deduct the interest portion of the PACE loans. Really interesting. If you have a lot of tax liabilities, really, really interesting, because not only you can get the federal solar tax credit of 30% with PACE, you can also deduct the full interest portion of the PACE loan. Really, really cool. Okay. And I'll send this website here as well. I think there's another website I was talking about. And then there's the property, what it is. They can do it with commercial, residential properties, a bunch of. I'm going to leave these resources for you in this video, but let's continue. Even though you're going to keep the property long term and you claim the federal solar tax credit, if you want the flexibility basically to be able to replace your panels at the end of the lease. I just like the idea of in the end of the lease, I can have the option of just removing the panels and see what's going to, just go from there. Or I don't, and just said and done. And they can't put a lien on a property. It doesn't matter if you stop payments and defaulting is not even going to affect your credit. So situations like that, even though you can claim the tax credit and you're keeping the property long term, this can make it a very interesting option. So hope that makes sense. Not affecting credit score. It makes your selling or refinancing your home easier if that situation were to arrive, because you might think you might keep the property long term, but who knows? Maybe you won't. I mean, depends on the person. Some people are like, no, absolutely sure this will always be a rental property is right. In some cases it could be, but maybe if you have a little bit of doubt, it could be an option to consider, because if that situation were to arise, you have those benefits as described. Power PVC, get that solar quote right away. We will do a Google Meets. It's going to be a lot of fun. And just to summarize here, did I finish all the information? I mean, the blog, you can read it thoroughly. It's going to be great. Yeah, we already talked about the lower monthly payments that leases can offer, reduced risk in those other senses. People do not care. Most people, unless you're like a really pro-environmentalist that actually care about the planet and saving the whales and the beach and stuff. I actually do. I love the nature. I love that. But some people, they just really care about the savings. But yeah, look at how much of an environmental impact you'll do in the world. It's like thinking about future generations, thinking about the future, right? And these are the stages of the project. Agreements are signed, welcome call, site survey is scheduled within 48 hours, design, permitting stage, get it approved, installation, then you get the final inspection approval, the permission to operate PTO, and then, hey, power on, baby. Can't wait for us to do this together. It's going to be great. See you in the next video. Put your zip code in here. Oh, my zip code is 32819. I live in Dr. Phillips, Orlando, right next to Universal. You know, you're gonna click in here. You're gonna see your, you know, obviously most people don't know, but just guesstimate. Oh, it's 250. We're gonna reconfirm this. Put your name. Oh, it's David. You know, David Hanks. You know, Peterson. I'm just joking here. David Peter at gmail.com. You're gonna put the information in here. You know, you're gonna put your phone number. Whatever. You're gonna put your. Oh, I put the email as the street. Don't do that. Put your street address, 123 Safe Street. You're going to click on next. I'm going to have access directly to this, and then you find your most recent, but when you need that build to design the solar system for you, if you can, just skip the step for now. Maybe, you know, you have a 4-year-old kid that's currently paintballing your brand new, you know, cyber truck, and then you got to do this more objectively. Well, there you go. We'll get the utility bill later, and let's make it happen. Looking forward to working with you. And again, if you have any homeowner, subscribe to my ambassador link. It's a free sign up. It's going to give you web pages like these to be able to recommend to your neighbors, your friends, and trusted colleagues, and whoever. Maybe sound fair enough? Let's make it happen. See you in the next video. Don't forget to subscribe, give a like, and leave in the comments down below what you thought about this video. And gonna be a pleasure to speaking to you soon.